With us on stage, Tech Mahindra's Managing Director and CEO, CP Gurnani, Chief Financial Officer, Rohit Anand, and President, BFSI, HLS, and Corporate Development, Vivek Agarwal. Without any further delay, over to you, CP.
Hi, good evening, good morning. The only reason I don't know who has logged in, and that's why I'm using the word good morning. Welcome to the Tech Mahindra Q1 23 results. Thank you for joining us today. I mean, all of you have seen the results. I can only say from my perspective that your company has delivered on the promises of being a purpose-driven, people-centric, and performance-driven organization. For purpose-driven, as you know, ESG is a very strong focus for Tech Mahindra. We have been ranked globally on a Capri Global Capital HU-Run Impact for SDG goals. We scored 46 and we've been ranked second. So your company continues to win laurels in ESG. In terms of people centricity, your company has been rated as the most preferred workplace at the India Today Summit. We improved our gender diversity from 34.1% to 34.4%. So all I can say from my perspective is, on the performance side also, I think we have doing a good job of integrating all our investments, building a culture of innovation, creating new service offerings like Metaverse, and also helping deliver differentiated and more futuristic solutions for our customers. Your company is also a proud digital partner for the Chess Olympiad, which will take place in India for the first time. And we do believe that our digital offerings, our FanNext.now offerings, will be one of the ways that the chess would be popularized around the globe and more so in India. So please do watch out for this space starting 28th in Chennai. Overall, from a performance point of view, I know Rohit will cover it in a much greater detail, but I have, I'm very happy with the growth. In constant currency, we have grown 3.5%. Communication media has grown 3.9%. Enterprise business has grown constant currency 3.2%. And total revenue in dollar terms is at $1,632 million. On profitability, considering the investments that we are making, considering that we are building new practices, our EBITDA is running at about 14.8%. And overall, I can only say is positive about our deal pipeline, more enthusiastic about our ability to harness and win some of the deals from that pipeline, and happy about overall the investment that we made in 5G, investments in cloud, IoT, and now in Meta, all coming together. So I know there is still a lot of work to be done. We are confident that we will be presenting to you continuously over the next few quarters. Industry-leading growth. We are also confident that we will have an opportunity to work on the profitability levers. We have identified areas where we would focus, and next few quarters we are determined to work and deliver better profitability. In general, the world is, been just about getting into this mood of forgetting that there was a health crisis. I mean, I've traveled extensively for the past 2.5 months, but different parts of the world clearly, there are signs of worry regarding the economic headwinds. More related to inflation, more related to energy crisis, and more related to, how different sectors will respond if there is a slowdown. So I know your company is looked at all sectors. Your company has analyzed the what-if scenarios, and I can only say is we, as a Tech Mahindra, will continue to deliver stronger performance. So I want to thank you all for being part of this meeting, physical meeting after a long time, and all those friends who are on a virtual mode, thank you for being with us today also. Thank you for your support. I'll let Rohit continue with our additional commentary.
Sure. Thanks, CP. So just a little bit about numbers for the quarter. Our revenue ended up at $1.632 million, which is a sequential quarterly growth of 3.5%, as CP mentioned. And versus last year, on a constant currency, it's a growth of 21%. You look at EBITDA, our EBITDA is at $239 million, which is down versus last quarter, basis the investments that CP mentioned we made on differentiated offerings that we tried to get to market, plus the continued supply side pressure. So that stands at 14.8%. From a PAT perspective, we've delivered $143 million US dollars of PAT, which is down 28% quarter over quarter and 22% YOY. In terms of free cash flow, we generated $72 million of free cash flow. Some of the highlights from a growth perspective: large deal wins, which is a metric of future revenue. We clocked $802 million of revenue, which is in line with the range that we anticipated. From vertical growth perspective, as CP mentioned, communication grew 3.9%, and we had quarterly sequential growth in high-tech vertical, closer to 6%. Manufacturing grew more than 4%. And then we look at three of our verticals now from a run rate perspective are more than $1 billion, which is communications, BFSI, and now manufacturing. So that's scalability from a vertical standpoint. Our attrition numbers for the quarter were down versus last time at 22% from 23.5%, so that was a positive trend. So as we look forward from a focus perspective, as CP mentioned, while we continue to get growth as the pipeline and deal wins are looking strong, a lot of focus will be on profitability, on operational excellence, which will drive into the second half. Thank you.
Vivek, you want to add about the $3 billion verticals and how we are going to be a lot more selective on acquisitions?
Yeah. So I think first on the $3 billion plus verticals in the business now, which is CME. CME, obviously, we see continued momentum on the back of 5G-led spending across our client base globally. And we think we are best positioned to take advantage of that opportunity. This is a great long-term spending cycle by a lot of our communication and media clients. And then on BFSI and manufacturing, BFSI we did touch a $1 billion run rate last quarter. We continue to see a robust pipeline in terms of growth and opportunities. We are bringing in synergy in some of the large deals which we've closed with our customers, and delighted that manufacturing, which in the 2020 and 2021 period was struggling with the global slowdown in manufacturing driven by COVID, we've now seen sustained growth in our manufacturing business. And it's a big milestone for the company, crossing $1 billion there, in annualized revenues, and it creates its own scale and right to win for us in that business. I think on the second part of the question around our M&A integration and portfolio synergy, as we mentioned in our last quarterly results, we've been fairly active last year in doing a number of transactions. So we will be selective as we go forward. I think the big management focus is on getting the integration done, driving synergies, and creating a one TechM portfolio. We've acquired a lot of different competencies from customer experience design, through to cloud and digital engineering capabilities in the last year. We are now very focused on consolidating them, taking them to our customer base of 1,250 customers globally, so that we become more relevant and have a higher wallet share there.
Thank you, CP, Rohit, and Vivek. We will now open the conference for a short Q&A session. Media friends who have joined us virtually can post their questions on the chat box. Post the session, we will proceed to the adjacent room for one-on-ones with select interactions. Any questions in the house for now?
Gentlemen, good evening, and congratulations on a good quarter.
It has to be your mic, Rima, even if it is bigger.
Can you break up the TCV of $802 million in communications and enterprise this time?
Yeah.
And also on margins, you are talking about improvement from here on. Have margins bottomed out at 11%? And what would be the exit rate for Q4?
Yeah, sure. So from a deal split perspective, communications is around $165 million US, and enterprise is 650. So that's 645. So that's a split. And that quarterly variation is always there. And when you look at it from an annual perspective, it's reflective of the run rate or the size of the business or the verticals. From a margin perspective, yes, it is the bottom for us from a yearly perspective. And as I said, and CP also mentioned, we've done conscious investments in bottom of the pyramid, where we now going to work on utilization increase, operational efficiencies on offshoring. Some large deal investments that have been made, and from a timing perspective, as they ramp up, the margin expands there also. So from a path perspective between pricing, operational efficiencies, and scale up, we have a path as we move forward to expansion. And I think from a range perspective, we've said earlier as well that our view and our path is going to be getting towards the 14% EBIT towards the end of the year.
So 14% exit rate for this financial year?
Yeah.
And CP, do you face any issues with your large clients? Because your top 5 clients have declined by 5.5%. In fact, the top 20 clients have seen a drop off in revenues.
No, so some of it is reported numbers, so its FX has an impact because some of the big clients are in the Europe region, so you've had a difference there. But beyond that, I think some projects that closed in the current quarter are having impact, but from a pattern perspective, there's nothing to take note of. In fact, it's good that we are expanding our share and broadening our base from a client concentration standpoint.
So the top clients will grow from next quarter?
Yes.
And there is no budget cancellation, no, just a runoff of a large project?
Yes. There are mostly that trend. We've not seen trends around budget cancellations across our demand portfolio, yes.
If I can just take a virtual question now. This question is from Amit Raja Nayak. Can you please throw some light on some of the work or projects Tech Mahindra is currently working in the area of metaverse? How has been the outcome so far?
It's one of our fastest growing practices. We announced this practice in February of this year. I can only say is that we're already working on about 60 projects globally, and for 25 customers, and the customers are in EdTech, customers are in retail, customers are in automotive dealer management. the customers are in repair and maintenance of cars. So all I can say is different customer base, but it is clearly one of our fastest growing practices.
Another question from Mini Tejasvi from The Hindu. What is the outlook for deal pipeline in the backdrop of a possible market slowdown and economic pressures? Plus, we hear from your peers that wages are also on the rise.
I think both of them are the realities in terms of that the world economy has a few challenges, whether they are supply chain, whether they're called inflation, or whether they're called a relative slowdown because of inflation and supply chain issues. I think when I look at my pipeline, it is very, very evident that there is still a lot of demand. My pipeline has never been better. So the first qualification of the pipeline that we believe is we should not look at only digital transformation. We should look at the impact it creates, which means, is it business transformation? The second filter that we are using is we are looking at, as I said, every industry vertical and the impact on their customers not spending money. So that means we are not focusing only on our client. We are also focusing on a client's client. If we are talking to an airline, we want to know, with the high cost of O&M, the high cost of gasoline, what is the likelihood of customer not spending money on the airline? So when you do this analysis, I think still the positive side is that there is an employment shortages. That means the rate of unemployment is one of the lowest around the world. And number two is many of our sectors, the consumer is still spending money. Yes, there are headwinds.
Next question is from Ashish A. There is some softness in BFSI on a sequential basis. Is it because of the macroeconomic challenges like high inflation, high rates, and a likely recession in the US?
Again, depending on the part of BFSI, it's a very, very large sector. I would say is modernization is all the more important. Transparency, compliances, risk management, cyber security is all the more important. Tracking the data and tracking the individual is all the more important. I'll let Vivek complete my answer.
So firstly, structurally, the demand across subsectors, and that's how we track it in financial services, remains strong. So there isn't any budget pressures or cancellations we are seeing. Clients are still continuing to invest in their transformation across a number of technologies around cloud, AI, digital experience. I think what on our quarterly numbers, what you see a slight dip, I think it's just a catch up on Q4. We had a big program and a big program milestone, which did give us a big upside in Q4. So it's just more a normalization. So, but structurally, we don't see any challenge there.
Last question before we move towards the select interviews. This is from HBL. CME is going to be a strong vertical for TechM, and with global 5G deployment, this is going to only move forward. TechM has also said it will work with enterprises and telcos to deploy 5G private networks. Would you be interested in directly acquiring spectrum for private network deployment? What percentage of your overall CME will earnings private networks make?
I don't think we're getting into this much of, in telecom language, it is called cellular details. But I promise you, yes, I've publicly stated that if in any service offering, if we can cut down a layer and get directly to the consumer, I will cut down that layer. Today, in countries like India, the spectrum will get released to A, B, or C applicant. Then I will go to the customer and integrate that spectrum into my service offering. What I have publicly stated is Tech Mahindra believes that for overall productivity and efficiency, 5G is a differentiator, and the private sector should be allowed to take that spectrum at zero cost. So we are not applying for the spectrum, but we would request the government to give to our end users spectrum at zero cost.
Thank you everyone for joining us. We'll now be concluding the conference. The recording is also available on our website and social media channels. Request you to please reach out to me or the team in case we were not able to address your queries. Thank you.